My name is Landon Cry.
Hello, my name is Asada Dawkins.
Hello, my name is Hakeem Oliver, and we'll be presenting our project Unilever, based in the Netherlands.
Unilever's corporate mission is to add vitality to life. They meet everyday needs for nutrition, hygiene, and personal care with brands that help people feel good, look good, and feel more of life.
Unilever Netherlands manufactures more than over 400 different food and personal care products, many of which are internationally known. The Netherlands-based Unilever, known as Unilever NV, operates jointly with its UK-based counterpart, Unilever PLC.
Unilever is one of the most dynamic and successful companies in the fast-moving consumer goods sector. Their head office is located in Rotterdam, Netherlands. In the Netherlands, their currency is the euro. As of November 16, 2021, €1 is equivalent to $1.13 USD. As previously mentioned, their focus is on the food and beverage sector, with most of their top-selling products being fast-moving consumer goods. However, they work in junction with Unilever PLC, the London-based company that focuses on the personal and home care industry. In 2020 of November, Unilever NV and Unilever PLC officially united, which made operations more efficient for both companies. Unilever NV could produce all of the food and beverages for Unilever PLC, while they produce all of the non-food goods for the Netherlands-based company. With this, they are both able to offer more brands and products to their market, with their main focus still being on manufacturing and producing the goods that they specialize in. Ultimately, the two companies reduce costs while offering more quality products to a wider audience.
Some of the most popular brands manufactured and sold by Unilever NV include Axe Deodorant and Grooming, Cif Cleaning Products, Dove Beauty and Personal Care, Lipton Tea and Beverage, Robin Laundry, and Hellmann's Condiments. However, their most successful brands in the Netherlands are all within the food and refreshments industry, including Chicken Tonight, Knorr, Unix, Connemex, and Coleman's.
The reason why these brands do so well in the Netherlands is because traditionally in Dutch culture, their diets consist of a high consumption of dairy, vegetables, and poultry compared to meats. Tea is also a product of high consumption, both cold and warm. Pastries are a big part of Dutch culture, including chocolate, almonds, nuts, and fruits.
One of the 3 generic strategies that Unilever uses is the focus strategy, meaning that they directly tailor their products to meet consumer needs based off of their geographical area, their product line, and the consumer type. They use this strategy due to the high volume of competition within the food and beverage industry, specifically in the Netherlands. Because the market is so competitive, Unilever would not be considered an oligopoly. However, they are considered an incumbent within the food and beverage industry sector.
Unilever thrives in the Netherlands as a result of brand identification and customer loyalty, which differentiates their products in the competitive market. This is a direct result of their successful understanding and execution of the focus strategy. Another strategy they use is to invest in multiple fast-growing startup companies that have a strong following to diversify their portfolio, with heavy focus on the beverage sector.
Speaking about investments, Unilever the Netherlands has acquired multiple companies in the past 4 years, including Graze, which is a London-based healthy snack company, GlaxoSmithKline, which is a health food drinks portfolio in India, and also Betty Ice, which is a Romanian ice cream manufacturer, all being horizontal acquisitions because they are in the same industry. They also acquired Blue Air, which is a Swedish air purifying company, and this would be a vertical upstream acquisition. Now that we have broken down what Unilever NV does, let's talk about how they are performing.
To get an understanding of how Unilever is performing in the Netherlands, we will first analyze an internal SWOT analysis. One of our first major strengths that Unilever has is their broad product and brand portfolio. This means that they produce a variety of products that reach multiple different markets, capturing a large audience. Our second strength is their steady revenue growth. Because they offer a vast amount of products in multiple markets, It is like very similar to a domino effect, where they have constant revenue growth because of the number of successful products that they sell. Another reason that they have steady revenue growth is because a lot of their products fall in the fast-moving consumer goods sector. Previously stated, the food and beverage sector, which is Unilever's main sector, has a lot of competition in the industry. So the more territorial presence that they have, the more market share they can control. Now moving on to their weaknesses. As previously mentioned, Unilever NV invests a lot in fast-growing startup companies, which is very risky. They often find themselves sometimes not receiving great returns on their investments, which ultimately leads to the declining in liquidity positions and product recalls. Now moving on to the opportunity aspect of the SWOT analysis. One of Unilever's major opportunities is cost-cutting initiatives. The company is able to do this by generating a steady revenue growth, which in turn helps them to identify any financial weaknesses within their operations. An example of this would be finding ways to reduce material costs and any other expenses that may incur. Another opportunity would be focusing on personal care products. Due to the coronavirus pandemic, there's been an influx in the need for essential items of brands such as Clorox Bleach, Dove Soap, Cif Cleaner, and those of which Unilever already offers. This will be a great opportunity for them to be profitable in that area. Moving on to the threats that Unilever may incur. One major threat is the challenging economic environment. This is a threat to Unilever because there is such a variety of competitors in their industry, so their market share often fluctuates.
Another way to analyze how well Unilever NV is performing is to look at them in comparison to their top competitors. Their top competitors include Nestle SA, the Procter & Gamble Company, and Reckitt Benckiser Group PLC. This is a breakdown of their competitive landscape. Unilever NV has the highest return on equity out of their three top competitors. This is because they utilize equity capital well. However, they also have the highest return of equity because they have taken on a lot of debt compared to their competition. They have the lowest return on assets because they have so many assets that they are not capitalizing on. They will be able to move higher on this list if they can leverage their assets in order to increase sales. They have the second highest return on invested capital because of how much they invest into future ventures, products, and brands compared to their direct competition. Now that we have analyzed how they are performing, we will now talk about what they can improve on. A way that Unilever NV can improve is by entering the beer industry. The reason for this is beer is the most popular drink in Dutch culture, and it is the most consumed alcoholic beverage. Beer has been an important part of Dutch culture since the Middle Ages, and it still is today. Therefore, the market will continue to be profitable. In 2019, there were over 600 breweries alone in the Netherlands, and they offered 150 beer tastings and tours. So therefore, Unilever NV will be able to profit from the popularity and importance of this beverage. This is a breakdown of the total alcoholic drink spending and consumption in the Netherlands from 2016 to 2023. So as you see, the alcoholic drink spending in euros per household as of 2021 is estimated to be around 651 euros. From 2022 and 2023, it will be a slight increase of 4%. Specifically speaking about beer, it has a higher consumption rate than any other alcoholic beverage, such as wine and also spirits.
Another way that Unilever can improve is by employing more local management. Currently, Unilever, based in the Netherlands, has a total of 30,000 employees. However, over a large percent of those employees that are in the C-suite are from the Americas and Asia. If Unilever has a domestic in-house approach by hiring local management, this can allow them a better understanding of all of the local trends in the market. This can also help the company gain more knowledge on consumer buying habits and preferences amongst different demographics. As a result, it can increase the innovation process and satisfy all generations of consumers by providing a newer, improved way of diversity.
Another way Unilever of the Netherlands can improve is by making smarter investments or limiting how much they invest in startup companies and other high-risk investments. Although the company stays up to date on what could be the next biggest opportunity to capitalize on, and they sometimes see significant returns on their investments from finding these companies early, they are not successful in the long run when it comes to their investment strategy. They have been following the routes of quantity over quality, which has proven to be unsuccessful for multiple years. In 2020, their cash flow from investments was negative €2,126,000, and their previous year it was negative €2,374,000. In 2019, their changing cash was negative €1,772,000 due to poor investments. In 2020, that did change for the better, ending with a €455,000 change in cash. However, that was due to an increase in cash flow from operations and an increase in cash flow from financial activities. Their cash flows from investment was still poor. Unilever NV can improve significantly if they hire employees or outsource the work from another company that specializes in investing for future successes, in the hopes of finding better investment opportunities or coming up with completely new strategies to reduce how much they risk and increase their profits in the long run. This would improve their financials, making shareholders happy, which would improve their stock price, eventually making the company worth more. They would then have more capital to give back to shareholders in the form of dividends or to put towards direct investments into the company, like buying more machinery, hiring more skilled workers, or spending more in research and development to better fulfill consumers' wants and needs.